Sanjay Dutt is ready. Sanjay, we are off to a slow start for 2014. Flows at best are mixed. Market breadth is not strong. Nifty is looking jammed, and the initial numbers which have come out so far are honestly in line with estimates.
Yeah, numbers so far have been pretty good. Particularly the technology sector, companies like TCS, HCL Tech have done really well. What is exciting and people are actually missing at this point of time is the FI debt flows. So, that's a very important thing versus the massive outflows we saw sometime, towards the end of last year. We've had very good FI inflows in terms of debt. So obviously that leads to, improvement in the currency and stability. I think that gives me positive hope that markets would do well ahead. Markets are consolidating very well on a, index basis. But if you look below the index, if you look into the market internals, you're seeing a lot of opportunity, you're seeing a lot of interest coming in. What I find interesting now is a lot of domestic fund managers and, overseas fund managers have started to visit and look at companies in the mid-cap and small-cap space. And we've obviously seen that space outperform over the last 3-4 months. So which obviously makes it clear that, there is interest coming back into the market. Index may not show it. It may show a very dull and slow start, like you said, but I think the undercurrent is reasonably positive.
Sanjay, so which spaces, according to you, would still be attractive? I mean, we've seen some bit of decline coming in because of TCS's marginally below expectation performance on Fridays. So should opportunities like those be looked at buying opportunities within the IT pack?
On the IT pack, I have a different opinion in the sense that, yes, the long-term prospects of the sector look very good. I would have a portion of my portfolio in there, but in the immediate short term and in the months ahead, I think IT should underperform. It's over-owned. It's a crowded trade at this point of time. Everyone's hiding in there, and it's just a matter of, a few days or a moment when a large institutional investor, someone big who suddenly decides to exit his IT bets more as a tactical, a trade than a strategic move in his portfolio, and that's where the sector would crack, and that probably would be a good time to come and buy it 10-20% cheaper, because at this point of time, I think the technical factors go against it completely. So I wouldn't be buying IT right now. I think I would focus more on cyclicals. If the inflation numbers are what they have been lately, and RBI stance would be less hawkish, or even if RBI just stands pat and doesn't do anything on the interest rates, forget cutting them, I think there would be a lot of movement there. And we are obviously seeing interest coming into the beaten down capital goods, metals, other cyclicals, which would see a lot of buying coming in.
Sanjay, just want to come to you on pharma. The view that you hold about IT, would that be true for pharma as well, that it's now getting to be a crowded trade, or do you think there is still significant potential upside in some of the pharma names?
Yes, I agree there that, as a broad sector call, it is a crowded trade. It is, everyone has got too much of pharma in his portfolio, every large investor. There are uncertainties there, and we every second, third day, hear about some problem or the other, whether US FDA or otherwise. And within this sector, one has to be extremely selective. Once again, I repeat that I'm not saying that one shouldn't have pharma in one's portfolio, but my tactical call is it's over-owned at this point of time. So therefore, I wouldn't want to put money into pharma at this point of time. If it does correct, if there are opportunities that come, I would selectively look at stocks. So I wouldn't really look at pharma as a whole, because some of the companies are extremely overvalued in the upper end of the range. But within the space, there are some opportunities still.
You're fully invested in your investment portfolio, and are you all loaded up in your trading positions?
I'm fully invested in my investment portfolio in Nikunj. On the trading side, it's a bit iffy in the sense that not getting the confidence to really take large bets as yet. in the last few years lost a lot of money, so therefore it's going to take time to regain that confidence because trading has been very uncertain. But I think it's time that, the trend would be your friend in various sectors, in various stocks. So there are opportunities that I can spot right now. So slowly one would start trading in them and building positions.
You mentioned that IT is a crowded trade. Yes, of course, IT is a crowded trade, but let me just throw in the valuation number. Infosys is trading at 16-17 times based on FY15 estimates. The P multiple for TCS is not that stretched, and Tech Mahindra hard to digest that a company of that quality after a recent run-up is still trading at 14-15 times. So whereas IT is a crowded trade, this crowded trade is not a very expensive trade.
I agree with what you're saying, Nikunj, but one must look at the other dynamics of this sector, because given the fact that it's an extremely human resource, in fact, it's a totally human resource driven sector, and we've seen kind of heartaches, what we've seen in Infosys, we've seen heartaches in a lot of other companies when it comes to restructuring, when it comes to leadership issues, and the fact that it's over-owned at this point of time, that gives me worries. It's a question which we have in the stock market. The stock might be 15 times or 16 times, but am I going to find the next sucker who's going to take that 2, 5, 10 million shares from me? That's what a big investor looks at. And at this point of time, those people who have India exposure, I don't think they can amongst themselves find any sucker who would take another 10 billion of Infosys or 5 billion of Infosys off their books at this point of time. So like I said, it's a tactical call which I feel that the sector would correct. Some stocks may not correct. That obviously is how corrections happen. But if you tell me as a sector that I'm going to deploy money at this point of time, I'm not comfortable. That may be a contrarian call from the street, but I'm not comfortable because I think there are many better opportunities available, which I can tell you are 5 or 6 times earning multiples versus 15, 17 of technology, or 16, 14, whatever. And those are under-owned. Yeah.
Right. Sanjay, telecom has been, pretty much in news across the board of late. While there is fear of competition only increasing and heating up as Reliance Jio enters the 2G auctions, there's also talk about Bharti, buying Loop Mobile, and the sum total that is being talked about, if actually comes through, most brokerages as well believe that this is going to be price positive for Bharti. Do you like anything out of the telecom basket?
There's both good news and bad news as if you look at the sector at this point of time. Let's first come to the good news. The good news being that the worst for the sector is over in terms of regulation, in terms of litigation, in terms of problems. I think they're all behind, they're all priced into what we are seeing in listed space. I think that's a very positive for the sector, that a lot of regulation, a lot of issues relating to government, etc. has been sorted out. So therefore now it's going to lead to a lot of investments and inflows as well as consolidation in the industry from overseas. The bad news, you don't know which the leaders are going to be, and you correctly mentioned that a big player is going to come in. It's going to come in with a lot of disruptive technology. It's going to come in with a lot of big bucks backing it. So it's going to be a problem for some of the weaker players. So therefore, where I would bet my money would be very selective. Something like an Idea Cellular looks good. Bharti is questionable because it's got a lot of problems of integration, a lot of issues related to overseas debt, etc., etc. I may not want to get into that. So therefore, an Idea looks good. Bharti doesn't look good. Arcom has come off from 150 to 120. If it corrects more, maybe an attractive bet, because that's a perfect candidate for an international company to come and actually collaborate with or totally buy out. And also, we always keep hearing about restructuring. So therefore, the fact that it's corrected, all the froth is taken out there, maybe I would like to take an exposure there. But overall, I think the fact that the sector is sorted out, a lot of problems for it are getting over, that's a positive. Now you'll see consolidation, you'll see uncertainty for a short period of time. So therefore, you're going to be, live with uncertain times. So that's the bad news there. So which makes it a little difficult to really invest in, but it's worth the challenge in some of the select companies.
Do you think big money will be made in PSU stocks, be it PSU banks, PSU oil stocks or PSU metal names?
I think PSU banks, I'm reasonably sure as a contrarian trade over the next 2 to 3 years that very big money would be made, because at this point of time they are the pariahs of the market. No one wants to touch them. They got an NPA problem. We're just short of saying that the banks are going to shut down. But given the fact that we have an excellent, leadership at the Reserve Bank of India, I expect some innovative steps being taken to sort out the NPA problem, whether it is big money coming in from international funds for restructuring NPAs, for restructuring companies which are having problems, or whatever that may be. There will be good amount of stuff that the RBI governor is going to do to solve this problem. So therefore, I think this is a good time to take those contrarian investment bets, and I once again say investment bets and not trading bets, because it's very difficult to understand if, the Bank Nifty is going to be down 1% or 2% today and up 1% tomorrow. So good quality banks with reasonably low NPAs, good branch networks, I don't think it's easy to really find them at the valuation that they're available today. And the fact that you're going to have new licenses coming in the next 2-3 months, that's the time when these existing banks are going to get re-rated, and people are going to finally realize if a new banking license is, going to cost so much of investment, it costs so much of money, why shouldn't I go and buy an existing good public sector bank? So I think this is a good time to start buying into bank PSUs. As far as the other PSUs are concerned, there are select opportunities. I think it's a good time to buy the IOCs and the HPCLs of the business. Irrespective of the state elections outcome, government continues to, do the diesel price adjustment slowly. And I think in a year's time, diesel subsidy will be totally out of the system more or less, or it will remain at a nominal level. And then finally, these companies would find the right value. Irrespective of the government that gets elected, this is a process which won't stop because there is no other choice available.
Sanjay, how focused is the market around the Jan 28th RBI policy? We've had a good print when it comes to WPI as well as CPI. Is that all leading up to a status quo policy by the RBI this time?
In terms of the repo rate, etc., it may be a status quo policy, but I expect a lot of other things to happen in the policy in terms of, regulation, and like I was just talking about, some amount of action in terms of what, the RBI governor has in mind to sort out the big NPA problem that one is living with and the slowdown that is there. I'm glad that the inflation numbers are improving, because the RBI governor was pretty clear last time that he's not doing anything because he's keeping a watch on the inflation numbers and he expects them to come down. And they have come down in the latest numbers we've seen. Rate cut may not happen, like you said, it may be a non-event, but I think a lot of other things will happen which will, give a boost to the sector and would actually feel the market, will send a positive feeler to the market that, there is a good governor in place who is totally in tune with the market, but is not dictated by the market. That, I think, is a very positive thing, that, he understands the actual business, street, economy, growth, and is not just focused on what the market wants. So I think that's what makes me feel positive about the end of this month policy.
So what happens in the near term, Sanjay? Do we have a ceiling around 6,300, 6,350? Because the market has had many failed attempts to cross past 6,300 as well.
Asha, I would say don't look at the index. Just get down to picking up stocks, follow a bottom-up approach, start doing your research. It's a good time to buy stocks. I'm not saying in 2014 you're going to be 2x, 3x on what you buy, but I think both time and price correction are more or less over. So you would see opportunities, there. Look at bottom-up stocks. Don't look at whether index is 63, 62, 61. Yes, of course, what you buy, it does come down if the index drops to 300-400 points, but it's not going to make up that much of a difference if you're in the right stock, because you'll make it more than enough once the index picks up momentum, whether it picks up 6 months later or 12 months later. So bottom-up approach and ignoring the index is what I would really recommend to people that do your homework on companies, look at undervalued stuff, look at cyclicals now, because it's time to, irrespective of who gets elected now, very positive to read, about the BJP's plans and in a way the manifesto for the economy and for what they want to do. So if BJP comes to power or if Congress comes to power, any government that comes to power, we're very clear that things are going to be improved from here. So we are at an inflection point for the economy after seeing the worst.
We're still talking about BJP and Congress. Nobody's talking about Aam Aadmi. But I will not ask you a political question. What I want to understand from you is that the way you invest is that when you like a stock, you always end up buying 1 or 2% equity of the company. Are you convinced? Are you ready to buy some percentage or some part of the stocks you like? If yes, which ones?
I'm convinced, but I'm broke. So, seeing the last 5 years, and I've mostly been bullish, I'm generally very positive and bullish. I'm more than convinced. So if you want to hear that, if investors want to hear that I'm convinced, this is the time to buy that 1 to 5% equity who can afford to buy. Yes, this is the right time. There's no second thought about it. So therefore, you can buy the 100 shares and you can buy the 10 million shares in a company. As far as I'm concerned, it's a different story in Kunj.